The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 13th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start of their day. Let's make sure that you and I, that we do everything that we can do to have a wonderful Wednesday. I'll do everything I can here during the next hour as we take a look at extraordinary tools that help us to identify where price is traveling to. We'll use those tools such as the A to B equals CD pattern. We'll use Fibonacci expansions and retracements. We'll look at Japanese candlestick charting out there. And, of course, we'll use the tools of our mind because trading is really all about psychology. So here's the key. This show is interactive. That means I need your assistance as well. Together, you and I, we can go hunting for bulls and bears. We can take a look at both sides of the trade, whatever it is that you're trading. In order to do that, you just have to give me a call at 877-927-6648. That's our toll-free number. And internationally, you can give us a call at 727-445-1044. Together, we can go hunting for bulls and bears. Let's remember this, folks. We are not creatures of circumstance, but instead we are creators of our own circumstance out there. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow up 42 points, trading out at 16,602. S&P up about 7, trading at 1940. NASDAQ Composite up 23 points, trading at 4412. Russell up 4.5 points, trading at 1137. NDX 100 up 23 points. New York Stock Exchange up 27. Goldilocks up $2 and change, trading at 13.30. We've got silver up 3 pennies. She's traded at $19.94. Light sweet crude up 6 cents, so kind of flattish market there. We've got over in Germany right now, the DAX is, come on, baby. Germany, the DAX is up 87 points, about 1 full percentage point. FTSE is up 4. Over in Asia last night, we had the Nikkei up 52 points, up about 0.3%. The Hang Seng up 200 points, up almost nearly 1 full percentage point, and the Shanghai up 1 point out there. All right, so let's go take a look at the market, see what they are doing. Let's take a look at both the daily and the weekly charts. It is hump day. It is the middle of the week out here, but let's start off and take a look at the S&P 500. Let's go get some messages out here and take a look. Now, if you're watching us on Tiger TV, what you're looking at in the upper portion of the screen, it's the weekly chart for the S&P 500. The daily chart is the bottom half of the screen. If you're just listening to radio, your mobile device at tfnn.mobi, thanks so much for doing that. The archive of this show, well, it's on Channel 10 on Tiger TV. And as we take a look at it, the weekly chart here, the yellow area indicates caution. So from a weekly standpoint, this is using the Rhodes Momentum Trading System out here. If we take a look at it, the signals, and as we take a look at it, we're just simply in a cautionary standpoint. For intermediate term funds to come back into the market out here, what you'd really need to see is a close above this trading session right here, which is August the 1st. That high is 1984.85. So need to see a close above that level. Now, all of the damage that was done inside the market down below here, it's the weekly chart, or it's the daily chart, I should say. You can see really one trading session, July the 31st out there. So that was the big trading session. What it did was it went ahead and it moved moving averages into bearish looking patterns out here. And right now what the S&P is trying to, it still has that bearish crossover. Try to explode this up just a tad on my screen for you. I'll actually go ahead and I'll increase the size of the daily chart here for the S&P 500. So it still has got that bearish cross pattern out there. Why is that important? Well, from a momentum standpoint, look, it's got the bulls were in place. They came in place here on last Friday. That's for sure out here. And the price is struggling with the 50-day exponential moving average. That's a black thick line going across my screen out there. But if we come back here, I'll come back further in the charts when we last had any kind of significant moves. You can see here, just coming back here into the January time frame, January and on the daily basis, where you saw that crossover take place was the 23rd or 24th of January. It wasn't until you saw that bullish cross right here, similar to what you're looking at maybe in the markets back in February, where that gave the markets really the freedom to continue running higher out there. And that's really that's the area that we're really looking at, and that's with the S&P 500. Let's go out to Connecticut, because I think I'll blow the name of the city out there. But instead, Bob will tell us where he's calling from. Bob, thanks for calling. Thanks for holding. How you doing this morning? Uh-oh. I don't hear Bob. Hello? Bob, you out there?
I wanted to talk to you about being... yes, I am.
Okay. You're cutting in and out, so give me... first, where are you from in Connecticut?
It's called Southington.
Southington. Okay, cool. How's the summer up there? You guys getting a bunch of rain right now, or?
Yes, we're getting rain. Things are good.
Oh, okay, good. Tell me what you wanted to take a look at out here, and I'll see what I can do to help.
Great. 2 ETFs. The first one is copper, which is JJC.
Yeah.
And the second one is HYG, which is junk bonds. I'm thinking about shorting copper and going long the junk bonds.
All right. Well, if we take a look at the ETF and what we really need to do, but I'll go ahead and take a look at the ETF for you. To trade copper, to trade an ETF for copper, we really should look at the underlying instrument. But let's go take a look at the ETF, JJC, down this morning, trading out at $38.12. So the first thing that I notice about this is that there's really no liquidity inside this. In other words, on a daily basis, Bob, this seems to be trading about 8,000 shares, 9,000 shares, 16,000 shares. So it may be difficult to get in and out of. And that would be the one thing that I would caution. Not that you might not be correct on the trade, but I would certainly caution you there because of the lack of liquidity. Now, maybe someone in the den can tell me if there's another ETF that might have better liquidity. Or have you traded this vehicle in the past, Bob?
No, I was just doing some research on it, but you bring up a great point about the liquidity.
Yeah, it's a scary thing when you see, for example, like on August the 8th, 5,254 shares for the entire day. So you don't have a lot of liquidity. I would hunt around and see if there is another ETF, or maybe even take a look at a copper company. I think Southern Copper. And I don't know enough about them, and I'm not suggesting that you trade that, but if we did take a look at that, I think it's SCCO might be the ticker symbol out here. That might be a better way to trade it, because if we take a look at Southern Copper Corp as an example, yesterday it generated 1.6 million shares. So you've got plenty of liquidity inside this vehicle. It's not going to track, copper per se, but exactly. But I think from a liquidity standpoint, I think you're better off in taking a look at that. So I hope that assists you. Now,
right.
I don't have anyone in the den ticking and giving me any other. Maybe somebody's hunting around for it to see if there's some other ETF. Now, if we take a look at the, that's really about the best information I can give you there. Is that okay, or any other questions that you might have?
That's great. It's all about preventing mistakes and education. Thank you.
Okay, good. Okay. Now let's go take a look at the high-grade, high-yield bonds, sometimes referred to as junkie-type bonds, I suppose, right? And you want to do now what are you trying to do here?
I did my own technical research, and it's looking like a strong buy or a strong long position. Seems like the rest of the world is, it's a contrary position. A lot of people are jumping out of the bonds right now.
Sure.
So I was wondering if there was any opportunity going against the crowd.
Well, I'll say maybe a lot of people are jumping out, but not our man Tom O'Brien. He has been nailing the bond trade right here all along. Here's what I would suggest to you as you take a look at that as you take a look at this ETF, and add maybe you've done this or not, but add this to your trading tool out here, and that is inside this ETF HYG. Come back to the trading session of June the 26th, and in this case here. Right now what I've done is just really tried to draw a trend line. So I'm using the high of that session, 95.39, and then I'm using the high of the trading session on July 14th. And that really sets up a pretty decent trend, and price is trading right into that. I would say that your trade is more likely to work out if you see a close above that trend line. Ideally, it's a close above a trend line or a channel line. And the only difference there is the channel line, you're using the body of the candle. You're not using the wick of the candle. And what you ideally like to see is a close above, and then price come back and test it, reject it, and then move higher out there. There's no like A to B equals CD pattern or anything like that I can give you inside of this equity. But I would say you are more likely right than wrong if it can break the trend. At this stage, today's action, so far it really hasn't broken through that trend out there. But you definitely have more liquidity. So with regard to that trade, it looks good to me if it can break through that level. What I will say is if it pulls back and you wanted to try the trade out here, I've got the TAS market profiles. And the TAS market profiles are very helpful because they also identify areas of support and resistance. And what this equity did was it broke above resistance, so that's bullish. Now, what price hasn't done is come back to test that area. So 92.81 might be a better buy. Of course, you're going to have to realize that it wasn't able to break through that trend line out there. Your better buy could be the 91, 92-ish level. And what I would also caution you on with regard to this ETF, as I just take a look at from a technical standpoint, is the trading session on August 1st was a high volume low out there. So I would just, I would pay attention to that as well. Price could easily pull back there. Your ideal trade is that it somehow comes back and tests that with less than 10 million shares, and then that might be the time where you've got better reward to risk out there. So either a breakout above the trend, come back and test it, and then let it motor on, or buy a retracement is the way that this looks as the best trade setup. But tell me tell me something, what have I confused you about, if anything, or what else what you've studied this. I've just taken a minute or 2 minute view of it to try to help you out here. Is there something else specifically you're looking at that I can assist you with here?
No, I look at certain market indicators. My work's a little bit different than yours, but in a lot of ways it's complementary. So I'm looking at the 5-day exponential moving average, MACD, the Williams, average true range, and unbalanced volume. So those 5 indicators.
Well, that's really cool. Let me do this. And Bob, thanks for even bringing that up. You'd almost think that would you hold on just through this next break here?
Absolutely.
Okay. So we're gonna go to a hard break. We've got Mike from Southernton, Connecticut, and after that we'll go to Mike in Thailand. We'll take a look at the DAX. But what Bob just brought up is a very cool thing, and I've got what's called the trading pyramid that I put on my screen. I want to come back and I want to compliment Bob on the indicators that he put on his charts out here. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 40. S&P is up 7. We're going to go back out to Bob in Southerton, Connecticut. Bob, you don't mind if I pay you a compliment, do you?
No, please.
Look, you just shared something. This is how I don't believe in coincidences out here, but how does this work is always the question that I have in my mind. What you shared with regard to the way that you take a look at a chart. Last night, I started creating what I call the trading pyramid. Did you watch this on Tiger TV?
Yes.
Perfect. Okay, so I'm going to put that up on my screen right now. And I developed this last night. I've talked about it from time to time. I just never really visually put anything together. So I decided to start working on this so I could include this in maybe a slide in different presentations that I do. But the point that I wanted to make, and what's so cool about what you said is how you take a look at a stock chart. And this is something that you shared, and I'd like this to be passed on to our listeners out here, is when you take a look at the overall decision-making for making trades, the very first thing you want to do is understand the broad market trend. And then you want to understand, whatever it is you're trading, where your support and resistance levels are. But what it is that you went into that you talked about as far as of the different indicators that you put on a chart. I break the trading pyramid into really the market's doing 4 different types of things. There's so many indicators that are available to each of us in today's day and age electronically. But you said, hey, I use the on-balance volume. I will tell you that you can break the market into 4 areas: the volume, supply, and demand. You can break it into volatility or liquidity, as we talked about. We can take a look at momentum, and you can take a look at the energy of the move, the angle of the move. And when you take a look at the number of different tools, and I've got some of those outlined out here for you folks, in volume for supply and demand, you can look at volume specifically. You can look at something called the demand index, volume rate of change. But what Bob said, what he has on his chart, is on-balance volume. So bravo there, check mark to you. From a momentum standpoint, I think I heard you say you use the Williams percentage R.
Yes, that's correct.
Yeah? You've taken another piece of it to understand momentum. Folks, you could use the relative strength index, which is one of my favorites. It doesn't really matter which one you use. You want to use one. You don't necessarily have to have multiples on the chart because many times they emulate each other out there. But from a momentum standpoint, Bob checks the box there. From a volatility standpoint, Bollinger Bands work pretty well, or Keltner channels, or standard deviations like our man Daryl Martin uses all the time. And then for the energy of the angle, for those folks that are fortunate enough to have the timing the trade, the art of timing the trade software out there, that power law vector indicator is cool. But you said use the MACD. So, in essence, you've identified, you're using, and you may be using a 4th one too, but you've identified, 3 of the 4 areas. And so I say kudos to you. And thanks for even mentioning that, because it was a nice segue into something that I created, and I think is very important for everybody to understand out there. So, you shared a very valuable lesson, in my opinion, for the way that traders should apply tools to their chart patterns out there. So I do want to say nice job.
Yes, I might also just add that I use the 5-day exponential moving average.
Yes.
And I also use MACD, as you said. Both of those are trend following. So of the group of 5, this will always keep me in the major trend of whatever, the security is.
Yes, no question. No question about it. And like I say, it really, TFNN is all about providing education. And so, what you just shared, as a caller, listener to the show is really, really valuable. And I don't know how it works in life, but how was it that I was working on this last night and you happened to mention it today? That's a beautiful thing. So thanks so much, Bob, for sharing that with our listeners out there. Thanks for calling, and have a great day.
Thank you.
You bet. Let's go out to Thailand now. Let's go to Mike in Thailand. Oh, Mike dropped, I guess. Mike, I apologize for that. I know that Mike wanted to look at the DAX out there, but he's on Skype. Mike, are you with us? No. Okay. All right. Well, I know that he wanted to take a look at. He wanted to be able to take a look at the DAX out there, and my apology. But if you get a chance, give us a call back, Mike, and we'll take a look at the DAX with you. I'll go ahead and put the DAX up on my screen out here. As we take a look at the DAX at this stage, because I don't know what Mike's specific question was, the DAX is still extremely weak. If we take a look at, as an example, exponential moving averages out here, as Bob was sharing with us, I've got 2 exponential moving averages, and they still are in the bearish mode out here. So far what we have seen is nothing more than a little counter-trend rally inside of the DAX. But maybe we'll be able to get Mike back on the phone from Thailand and surf the chart with him as well. Right now, Dow's up 30, S&P is up 6. This is Steve Rhodes and TFNN. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds. Plus, you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 32, S&P's up 7 right now. NASDAQ Composite up 27 points. Gold really unchanged, up $3.80. Silver up 1 penny. Let's take a look at some equities here that are moving in the markets, taking over the leadership role from Amazon. And Amazon gapped up this morning, created an island bottom reversal. So it's that's about as bullish of a pattern as you can get out there. So far, the volume behind the move, 2 million shares out here. Now, it's got a pretty decent supply line. I mean, a very decent supply line. 17 million shares were sold to the downside on July 25th. But that's pretty good volume today so far. 2 million shares in 1 hour of trading. You know, if volume were to maintain that level, which it likely won't, that's 12 12 million session a day out there inside of Amazon. But we've got Intercept Pharmaceuticals. I think that thing's been all over the place out here. It's up about $17. Take a look at how this thing sold off yesterday. Gapped up. I don't recall what the news was, but in essence sold off all day long from a level of about $340. Got up to a high of $349.08. Closed out the session at $276 out here. So that's a daily chart that we're taking a look at. This thing had really gapped up. I forget what they were curing out here, but take a look at the trading session from January 9th. Now, that's wide price spread as well and accelerated volume. So even though the candle finished at its lows yesterday, it still was moving higher with expanding volume out there. But I don't know that I want to get in front of this freight train. That's the Intercept Pharmaceuticals. Fleet Core Technologies, FLT, that's up $8.50. It's up about $6.50 out here. That is trying to take out a most recent swing point. It's a very nice, bullish-looking chart out here. Nothing bearish, and today it's trying to take out the swing high from July 30th. That only had 749,000 shares. Today up with 995 as we speak. So that is a good-looking stock chart. Also to the upside, Biogen, BIIB, that's up 2%, up $6 and change out here. Let's go see what Biogen is. Now, Biogen did have a confirmed A to B equals CD to the upside. That should take price back up to its highs. Its swing point high that I'm referring to is March 19th. And that's at the level from 358.89. The 1-to-1, A to B equals CD. That is still in play out here. Takes it to 359.22. So that's still what is in play, and that is in Biogen, BIIB. That's the daily chart that we're looking at. Yeah, still a pretty decent looking stock chart. Now, it has some problems. There's no question it had some problems back here in March of this year, the trading session specifically March 21st, where it did have some volume off of the highs out there. So what this really is more likely setting up is a consolidation pattern, and that consolidation being from, you can really see it clearly on this stock chart. Let me remove the A to B equals CD pattern, and let me just use a rectangular tool out here, and we'll kind of draw it in. And this is what I expect is that we will see inside of Biogen, which is the blue shaded area as the consolidation level. To change that pattern, it'll have to take out the March 19th swing point at 358.89. Not that it can't do that, but this volume here off of the highs, probably those sellers aren't gone, and they're just looking now to be able to sell back in. Perhaps that's the pattern that is in fact out there. That's on Biogen. We've got Mike from Pennington, New Jersey. Mike wants to take a look at Tesla. Mike, thanks for calling. Thanks for holding. How you doing this morning?
Good. How you doing today?
Excellent. Thanks so much for asking. And tell us what you're doing with Tesla. Are you looking to go short? Are you long? Tell me what you're doing.
I've been long since Friday.
Okay.
And I actually have calls that expire this Friday, and I sold them and bought them back. So now I'm in. I have pretty much no downside risk. So I'm just wondering what it looks like now. I know you mentioned the other day it takes out 265. Who knows where it's going to go? But right now it's hovering around that area.
It is, and that 265 level, folks, that Mike is referring to is the trading session from February 28th. And that's its swing point high, 265 and 24 million shares out there. Now, you came into it, or price came into it. If we take a look when price began coming into that equity, that swing point was on the trading session of August 6th, and had 9 million shares that day, then 7, then 5, then 8, then 6, and today so far about 3 million shares. It doesn't seem to me like it has the volume to necessarily take that out. That doesn't mean that it can't. Closing above 265, volume or not, says, okay, a continued move higher out here. If I look for a smaller A to B equals CD, let me look at that too. The smaller one we'd look at I want to see if it took the B point out with volume. And where I'm looking at, Mike, it looks like June 30th high of 244.49. And that had volume of 4.8 million shares, and it got up and over it with 9 million shares. Okay, so there's a smaller A to B equals CD pattern that we can go take a look at. Let's go do that for you and see what that price projection is. Just in case it gets over that high with light volume, then what we can do is Come on, delete for me. There we go. Okay. So now let's take a look at that small pattern out here. And what I'm doing, folks, I'm coming down to the low of May 9th. That's going to be my A point. And my B point looks like it's going to be the high out here on June the 3rd. And then my C point, I'm having a little bit of a delay, so I always have a backup plan. It's good to have a backup plan, don't you think, Mike?
Yes, absolutely.
Yeah. Otherwise, I'd be really struggling here. All right, so now I'm going to put Tesla up on my screen. Now I'm going to draw another A to B equals CD pattern for you. And that smaller pattern says that you can see a move price-wise up to probably about, it's already done the 1-to-1 on that one. So I would say the next level would be, let me scrunch it down, maybe 270 or so.
Right.
Might be the extent of the move out here, but you may have gotten everything that you can out of Tesla. Hey, no reversal signs. It's just when you get into a swing point with lighter volume, and today would really be that trading session. If you close back below 265 on lighter volume, you've got a rejection of a swing point on price and volume, and it just says, I mean, the good news is I don't see any selling to the downside. It just starts to get a little bit iffy. You know what I mean?
Right. It's a little heavy sometimes.
Yeah, and it's certainly in the overbought territory if you use a 14 period relative strength indicator. So it's done what it should have done. That doesn't mean that it can't do more, but it's really done what it should have done. So nothing really bearish, with the exception of taking it on a swing point high with light volume. If it closes over that, then just continue to monitor it. That's about the best advice I think that I can give to you. If we do take a look at one more thing up here, I can put Tesla up, TSLA, and let's go do the Chapman wave counts. Let's go see how far up this thing has gone. Give me a moment to do that off of its most recent lows out here, which looks like to me are probably from this trading session right here. So if we go do the wave count to the upside, then you're also at a peak D. So now the combination of all those factors, if it closes back below at 265, it might not be bad to just kind of move aside.
Yeah, wait, see what happens. Yeah.
So that doesn't mean it won't go higher. But just trying to take a look at it from all the tools that we have here at TFNN.
Right. I've shorted many stocks that just keep going higher.
Yes. I'm not saying short this, but
I know. I'm saying
definitely.
Just go higher, and I'm like, why is that happening?
Yeah, well, look, it's still a sexy stock out there, So you got stocks like LinkedIn, Tesla. There's a number of others out there. Facebook. Probably so a number of other sexy stocks, and you can do all the valuations you want as to where the stock is trading, its valuation per number of cars that it sells, and so on and so forth. But we're technical traders; we just look at the patterns out there. Because every stock chart that we look at, how much do we really know of what's going on inside the actual company itself? So sometimes I think we might pay too much homage to. If we're really going to be technical traders, let's just look at the technical patterns.
Right. Hey, I got another one if you have a minute.
Yeah, sure. Go right ahead.
I've been sitting on KMI, and then I wake up one day and it's in the headline. But
yeah, nice going there.
I still plan on sitting on it, but what's it look like to you?
Well, if we take a look at it, you got everything that have you been sitting on it for a while?
It's something I sort of hold on to not sell and just leave it. But now that it's made a move, I was thinking maybe I could sell it and buy it back, but that wasn't really my plan when I bought it. I was just going to sit on it and just leave it.
Yeah, if you were going to sell it and buy it back, your buy on this thing would be if it could pull back into that August 8th time frame. But I don't know that it will do that. I don't know whether it will or won't. Nobody really does. And the reason why I say I don't know if it will do that is because, in essence, they've changed the structure of the company by consolidating the units together. I believe that was the deal, was it not?
Yeah, and they're not going to be an MLP anymore. They're going to be just a regular shareholder company where they can do buyouts, they can do all kinds of things now. Where before they couldn't do that.
Yeah. Now, years from now, we won't remember what took place when we take a look at the stock chart. we take a look at that August, at that day that you woke up and this thing didn't fall out of bed. This thing created some additional floors for you. So we won't know, we probably won't remember, but we'll take a look at that wide-ranging bar, huge wide-ranging bar on August the 11th, and a big volume behind that move. And that would just say, hey, look, if this thing ever pulled back into the range of 35.43 to 36.15, and it did it with light volume, that would really be your next, buy area. But there is no real reason for this to not go up to its swing point highs from back in May of 2013. I can't find any reason here. It's not like it's a three-gap play or anything to the upside, so that wasn't an exhaustion gap. I just don't see, I don't see anything negative about it. Is there anything that you're looking at that you're kind of questioning that might be
it moved up so strongly and came back down so strongly, and I'm looking at an
intraday chart of some sort?
I'm looking at actually a monthly on
okay.
FinViz has a line drawn, and it's just, I don't know, I'll just look at that.
Well, okay. So if you look at the monthly chart, the what it's dealing with, and you're certainly right about that. So thanks for even pointing that out. If we take a look at the resistance, in essence, inside of Kinder Morgan on a monthly basis, it's really there. And what I mean is, you've got this little shooting star candle that took place the month of May in 2013. And so the resistance level, which it hit during this month, was that high of 41.49. But boy, when you move into a resistance area, you move into a swing point with volume, which, this has done, it's just hard to, it's hard for me to think that it's not at least going back out there and touching these highs again.
Well, with bond prices so low, this is giving off like 5.5% yield. So that might be another why funds might be moving into it.
Yeah,
yield funds anyway.
Yeah, not too much negative that I can see about this trade at the moment.
All righty. Well, I'm still sitting on it.
All righty. Thanks so much for calling, Mike. You bet you. You too. That was Mike in Pennington, New Jersey, that is. And so let's go back here. Let's go check out the markets and see what kind of movement we've got going on right now. The Dow's up 42. S&P is up 7. NASDAQ Composite up 31 points out here. There were a couple of stocks here. We'll do the market wrap up in the last segment of the show. Things really moving to the downside out here. SeaWorld, what a horrible looking stock chart. Now this is a IPO, and this thing is down with huge volume. And in essence, nearly every shareholder in here is in the red. It's trading out now at $20.05. 13 million shares look like already to the downside out there. So that's pretty nasty for the day. And no matter how you take a look at this one, weekly chart, here's where you take a look at the weekly chart in the IPO. This thing, where's this going to stop? I don't have a clue. And, from a technical standpoint, there is no technical pattern that I can see that you would utilize here inside SeaWorld. This thing looks pretty darn bad out there. Too bad. Fossil Group, that's moving lower. We've looked at that. King Digital, that does not look good. Cree. How about Tiffany & Company? Let's go see what's going on with the Blue Box Company. It's struggling today. It's off about 4%, down $3.89. The weekly chart here shows that it right now is trading down into a potential support area, and that's its market profile high, which can I get that priced out at? It's right around the 95, looks like maybe 95.85 or so. So it closed below that. Now, Tiffany actually, from a weekly standpoint, had a nice sign of strength out here. So even if it does break its market profile low, it's trading into that sign of strength from the week of May 19th that had 11 million shares to the upside and pulling back so far with light volume. So even though it's struggling here this morning, 2.2 million shares for the week to the downside, your buy point, in fact, has another sign of strength on a weekly basis. That's Tiffany back on November the 25th out there. But as I switch over to the daily here, before we go to this hard break, you can see that that sign of strength. If it closes below 95.03, it may come all the way back to that sign of strength, which is the trading session from May 20th out there. That low was 87.99. The high is 90.83. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 41 points right now. She's trading out at 16,601. S&P is up about 8, traded 1941 and changed out there. NASDAQ Composite up 30 points. So as we take a look at today's trading session, and stay tuned, our man Basil Chapman is up next, and then we've got Larry Pesavento following Basil. After that, Daryl Martin, David White, the Tom O'Brien Show from 3 to 5. And I believe that Andy Heck is doing a webinar tonight. So if you haven't had a chance to test drive Andy's newsletter, come on over to the homepage of TFNN.com. That's the way that you'll get in. You can test drive the newsletter service, get that for 30 days and get access to his webinars workshop tonight. That is at 6 p.m. So it's free to subscribers to Andy's newsletter service out there. So as we end this trading hour out here, what we'll do is I want to come back and take a look at the ES Mini. Now, the ES Mini at the 10 a.m. session, this is a 2-hour chart that we're taking a look at. So this next session does not close until 12 noon out there, so the end of Basil's show. But it gave us the Bears are out here trying to defend the territory of its high, which was 1941. And 1941 formed a nice little bearish engulfing candle out here. We've seen this level here that has been defended by the Bears coming all the way back into the August 11th time frame. So the first time we saw this area defended was back at 2 p.m., the 2 p.m. session on August the 11th. We saw this level here defended at 8 a.m. on August the 12th. And now we're August the 13th, and we're seeing that level also be defended. What else do we have up here to pay attention to? Well, you've got a 200-period exponential moving average. That's the little red dotted line that's going across my screen. You've got a market profile high, a TAS market profile. It's also at 1941. So pretty safe to say that if we see a close above 1941 on any 2-hour basis out here, that the Bears will have lost that battle, because we can clearly see where they are laying out at. Now, a punch up into the top of this descending price channel, that's the diagonal blue line on my screen out here. A punch up to that level and a close back below 1941. The work will have been done that it needed to do, in essence, to the upside out there. Of course, a break above 1941, a break above that rising price channel, and then the ES Mini maybe following along with what the Russell 2000 and NASDAQ have already done, and they have broken through their descending price channel out there. If we take a look, that's what the message of the S&P futures is on that 120-minute time frame. If we just take a look at the S&P futures, the same September contract, and look at the daily time frame as well. Now, the daily is going to use some different channel lines because of the bodies of the candles that we're using out here. And that says that today's trading session is important also for the daily chart, because right now price has just kind of poked its head above that descending price channel out there. So if it can get above, again, that 1941 level, that would take you to the bullish side of the case. Likewise, a close below 1923, what is the number out here? I should have it memorized, 1923.50, and I have to say all bets are off, and we're probably then going to see the resumption of the move down in the marketplace that in essence began, for the most part, really began on July 31st out there. So, folks, stay tuned. Our man Basil Chapman, he'll be up next. We've got the Dow's up 42, S&P is up 8, NASDAQ up 31 points out there. And thanks to all the callers today. Always love to hear from all our tigers and tigresses. And I just want you to remember just one thing, and that's this. You have an amazing power within yourself. And that power, folks, it's so strong it'll cure incurable diseases. It'll build billion-dollar businesses. It'll create a life of abundance. But most of all, folks, it'll paint magnificent masterpieces and create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Wednesday. I look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.